So welcome everyone to another beautiful simulation here today. What we're going to do today is going to be running inter-session trades. What that means is that when you have a trade that runs from one session to another session, right? But before we do that, we're going to identify what's that's going to be. So we're going to be looking at the charts around, like New York time is going to be 1 a.m. Eastern, about 2 hours before London Open. That's going to be your pre-London. That's when volume starts to kick in after the Asian session. We're going to continue on into London session, London Open, pre-New York, and up till New York Open, right? So we're going to be looking at the 4 hour, 1 hour charts. So executions are going to be on the 1 hour, and we're going to be looking at it from in Zoom. We have another screen you are sharing. We are seeing OBS. Oh, how is that possible? That is. Oh, how about now? Now it's correct. Now you see this thing over here. Oh, okay, good. Yeah, sorry, my bad. Imagine the whole thing was recorded like that. Okay, awesome. So we're gonna get some dates over here now. We're gonna choose 30 dates. We're gonna go back into July, I guess, 2021. And we're gonna keep this as September 30th, 30 days in September, right? And we only need Sundays. Okay, let's get some dates over here. And the number of requested dates must be in an integer between 1 and 25. Okay, no problem. Been a long while since I heard the word integer. All right, we got a lot of these dates over there. So let's do September 12th or March or May. September 13th. Okay, we can't do September 13th, so we're going to do September 12th. Because September 13th is a Monday, not a Sunday. So we're going to September 12th. It's going to be gold. Ooh, gold have a lot of data over here. Very nice. September 12th. We're going to start with, let's start with 3,000, right? 3,000. Start with 3,000 New York close. So the risk we're going to use is going to be around, a 2% risk, 1 to 2% risk. Leverage 1 to 100. Spread, we're going to have a fixed spread of around 15 pips right there. History on the data chart, we're going to see like 350 days. Everything's good. All right, let's start the simulation over here. So first, we will add up these charts here from the weekly. There we go, from the daily, 4 hour, 1 hour, and the 30-minute. That's all we're going to do here today. 30-minute, 1 hour, 4 hour, daily, weekly, right? Okay. Let's see here. We have the 30-minute, we have the 1 hour, 4 hour, daily, weekly. So the entire idea about, taking intersection trades is basically you're visualizing the 4 hour candles, right? You're basically visualizing the 4 hour candles. You're visualizing where the 4 hour candles are most likely to go, and based on that, then you're taking advantage of the 1 hour market structure or the 30-minute market structure to actually, take some entries and maybe, have them run throughout the whole session. So first, what we're going to do is, so we have what, 1 hour, 4 hour, this is 30-minute. So first what we're going to do is we're going to go towards the 1 a.m. Eastern time. That's going to be, so this is 6 p.m. and go to 6, 7, 8, 9, 10, 11, 12, 1. This is 1 a.m. Eastern time, right? This is 2 hours before London Open. So let's take a look on the weekly here first. Now, the previous weekly candle, we created let's get some line studies up over here. Let's get some charts over here. Perfect. So we created a resistance right here, right? We have a resistance forming. At the same time, since you have resistance forming, we came down. Now this new weekly candle started. Now, if we look at this bearish weekly candle, this overshadowed the previous candle here as well. So if you want to visualize, you can say that, okay, maybe the weekly candle is pushing up a little bit to maybe push further down, right? But we'll need to break below this low for price to actually push down. Let's take a look on the daily time frame here. Now, looking at the daily, we have some more information that, we're basically kind of consolidating here. And at the same time, we have this resistance formed right over here. Now, we got to clone this over to the smaller time frames. Let's say the 4-hour time frame. Now, looking at the 4-hour, we have some market structure over here. And this is what the market structure is saying. Right, the new 4-hour candle is about to start, so obviously we're creating a support. Now, if we're creating support right here, this 4-hour candle, this is very important, right? This is going to, obviously, this is a volatile candle, and if you want to define volatile candles are the candles that break the high and they break the low, right? So we came down towards support. This kind of closed bearish. At one point, this 4-hour candle broke below this low and continued to push down. But what happened to the 4-hour candle? It pushed down, but it came right back up and closed bullish. So this is a very, very good indication that even though if we closed bullish right here, there's a very good possibility that price may continue to push up. That's something that may happen right over here. That price may continue to push up. So that's the idea that we're going to go off with, right? Because we closed bullish after grabbing a lot of liquidity down at the bottom. Let's take a look on the 1-hour time frame here. Now, we got to adjust these zones based on the 1-hour time frame. This is where we have the support down at this point. Now, our bias from the 4-hour is that there's a possibility we may start to go bullish. Now, if we want the 4-hour candle to go bullish, we need some sort of a support formed on the 1-hour time frame that's going to give us that sort of confidence that price may continue to go up. So that's what we're going to wait for. We're going to wait for some sort of a support formed, and then obviously we can try to take a buy for price to go up. All right. Let's speed it up here a little bit. And all we got to do is wait for some sort of a support. Speed it up here a little bit more. This, perfect. And as you can see, this is pre-London. Maybe, volume is a little bit low here because we got to wait for volume to kick in. So slowly we're going to be waiting for the candles to close. All right. We have the 1-hour candle trying to form in a certain way to maybe, let's see if we can break this high. If we can break above this high, I think that's going to be a very good impulse entry for price to move up in this 42 pip range. And then we could say that, 4-hour candle is breaking the high. Because if the 1-hour candle breaks above this high, that's going to be the 4-hour candle also breaking above the previous 4-hour candle's high. So in that sense, this could be a very, very good trade. So we're going to wait. Let's take a look on the 1-hour over here. There's going to be a lot of waiting happening now. Just waiting to see if we can break above that high. Because if we see now, it's coming up to break above this high. So we got to wait for the spreads to also cross above this area. If they do, I think that's going to be a really, really good entry right over here. So this is where we're going to enter a buy position. It's going to be a 1% risk. We're going to enter a buy. Visual is going to be a buy. Stops are going to be right over here somewhere. We're anticipating price to continue to push up, But the only problem is now the reason why I didn't put the stops below this candle because this would have been a pretty big area. This would have been like almost like 30 pip stop. I put it in between the candle, which is also below the 30-minute candle, which is where it makes perfect sense here as well. Because having it below the 30-minute candle is better because now the stop loss is small, right? But if you look on the 1 hour is going to be pretty big. So we're going to leave it as it is. And as price forms, Now we'll see. Now, when it comes towards managing risk, right? Because we may have to manage this risk as well. If this candle closes below 1792, the entire trade is going to be closed, because that would mean is that we're closing below this resistance on the 30-minute candles, right? It's very, very important. So we have still 12 simulation minutes left. So we're going to see what kind of close we get on this right here. We have almost 9 simulation minutes left. This would be very interesting to see how we get a close. We're breaking above those areas. We're about to close. 3, 2, 1. There we go. Candle has closed. 1 hour candle also has closed. And the way the 1 hour candle has closed, this is giving us a lot of confirmation that, okay, now if we break above this high, there's a very good possibility for price to continue to push up. And that's something that we're going to look at. Also, the 4 hour also looks good, right? Perfect. Makes perfect sense. Will we add a position? I'm not sure if we're going to be looking to add a position, because now we're just counting on volume to continue driving price up. Let's take a look at the pips over here, because now we got to start counting our pips. So we're up about 4 pips at this point. Candle has broken the high. Okay. Can you please clarify why this trade on hourly and not 30-minute, more of a swing trade? Yeah, exactly. Like, we're going through the whole simulation. So we took the trade as the 1 hour candle was breaking the high. That's the same thing as the 30. It's not about what time frame you're taking the trade. It's about when are you taking the trade. So even if we took it on the 30-minute breaking above this high right here, would have been the same thing as 1 hour breaking the high right here. So there's no set rule that you could say that, oh, you know what, I'm only going to enter on the 30-minute or only on the 1 hour. You're combining all the time frames together, and then you're creating a bias that, okay, why are you going to take a trade? Because even if you look on the 4 hour, someone can turn around and say, oh, you know what, I took the trade as the 4 hour broke the high. But when you look at the 1 hour, you'll see that, okay, I took the trade when the 1 hour broke the previous high. So if you look on the 30 minutes, the same thing. Add position with 0.5% risk more? No. Um, no, because it's already 1% right here, so don't need to add another 0.5. If we would have added 0.5 because it was an impulse entry, then we could add another 0.5 to make it a full 1%. Now, talking about managing risk, right? So got activated right here. This candle pushed up and broke above the previous high. It's very important. Once it broke above the previous high, now if this candle it breaks its own low, we're going to be closing 50%, because this is the time of volume. And whenever you have volume time, there's a very high possibility that price should continue to push up. If price doesn't do what you expected it to do and does something that goes against your bias, then you have to manage risk at that point. So we're going to see. It's good. It stays bullish, so we could continue to push up. But if it breaks its own low, then obviously we're going to be closing around, see right there, it broke its own low. It doesn't necessarily close bearish, but it broke its own low. If it broke its own low, this means that there's a possibility it can make a newer low. So now you got to look at different possibilities, right? This is very, very important. So when I'm looking at price action run like this, I have multiple scenarios going through my mind. The first scenario is that, okay, it broke its own low. What does that mean? That means it can make a deeper low, right? So if it can make a deeper low, do I want to close 50%? Absolutely. Because if it starts to break up high again, then I can add that 50% back, right? That's number one. Number two is that once it broke its own low, I don't know whether it's going to continue to go bearish below this blue line here or not. Because if it does go below this area and closes back in this range, then I'd be happy that I managed risk, right? So let's see right here. It broke its own low. Hopefully it's just making a lower wick for it to continue to push up. It's coming deeper into this range right here, even though the stop loss is right down there. Now, once it's coming deeper into this range at the time of volume, because you got to understand this thing right now. When we have volume in the market and price doesn't do what you thought it's going to do what you didn't think it's going to do. Make sense? Whenever you have time of volume, you're going to see big candles forming, right? Either those big candles are going to form in your favor or they're going to form against you, right? So if it's not doing what you thought it's going to do, then it's going to do something that you fear, or it's going to do something that you didn't think it's going to do. So we thought it's going to, break the high and continue to go up. But if it's not if it broke the high and coming back in this range this deep, then there's a possibility it's going to do what you didn't think it's going to do, and that would be probably like, continue to push down. So at this point right here, I'm going to close another 50% because, it's just like you secure profits as price goes in profits, you're securing your losses as price goes in a loss, right? So it works the same way. Oh wow, look at that, right? Now, does it make sense to keep holding this trade? Probably not. Considering the candle on the left, was this a good impulse trade? I think this was an amazing impulse trade because you had a candle closing above this area. You have the 1 hour candle closing above this area, and there was volume time. There was pre-London. So next candle had to make a lower wick, break the high, and continue to go up. And we had clean candles to the left hand side. But this one right here, I would say, you know, um, maybe the probability wasn't in our favor because if I see these trades happen, like let's say 10 times, I'm going to execute them 10 times because most times they're going to be profitable trades. So this trade is changed to fake out. Yeah, possibly. That's what I was thinking right here. So we're going to wait for the candles to close, and then we're going to see whether it can be a fake out execution. Now, was what are your thoughts on the previous 1 hour breaking the low and the high? What? What previous 1 hour breaking the low? This one? Nothing. No thoughts. It broke the high, so we want it to go up. So anyway, now a fake out is, so let me just also explain a fake out right here. Let me get my marker here. Okay, so this is what a fake out is. You have a resistance, you have a support, right? You have price bouncing around in resistance, and then price breaks above resistance, comes back down to do a retest, and then you have some confirmations that price can continue to go up. But if for some reason, if price instead of moving up, it comes back down in the range, then this move up becomes a fake out. Once this move up becomes a fake out, there's a very good possibility that price will continue to push back down in this range, and then there's a 70% chance price will break through the other part. And the reason why is because if we broke up, and if price couldn't maintain its momentum to continue pushing up, where's it going to go? It's probably going to go down because price will always move up or it's going to move down. If your confirmations and your biases for moving up did not meet, or if price didn't do what we thought it would do as it broke above these technical levels, it's definitely going to do the opposite thing. So let's remove this right here, and yeah, let's just wait for the 30-minute candle to close, and yeah, let's see. We've still got about 15 minutes left. 15 simulation minutes left, right? So the 15-minute candles have closed back in the range. So yeah, we'll see. Oh wow, look at that. The 30-minute is continuing to push down over here. 30-minute candle has around 9 simulation minutes left. It would be best to see this 30-minute candle closing with a wick, so we can see some fake out in action. But if it doesn't, it doesn't, it's okay. It's still a Monday over here. All right, let's take a look on the fifth. No, we're not looking at the 15-minute. We have to stick by rules: 4 hour, 1 hour, and 30-minute. And there we go. 30-minute candle has closed too long. Now, one mistake, traders make over here is that they'll try to take a sell as this candle breaks below this low to continue pushing down. The problem is here your stop loss is, is way too big at this point. So whenever you have a very, very big candle closing out of a range, it's always better to wait for price to create some sort of a retracement, resistance, and then continue to push down. So in this case, we're just going to wait for the 1 hour candle to close. Right, so ironically, I think we are trying to push up over here, which is pretty good. If you can push up, create some sort of resistance, or if we close back in the range, then it's going to be a double fake out, I guess. All right. London Open is also about to start very, very soon over here now. London Open is about to begin in 9 minutes. So taking a sell right here wouldn't be a good idea, I would say, because the London Open is about to start. Wait for a pullback, then a bearish candle, and that should be confirmation for sells. Yes. Yeah, but I don't like the way it's forming now. I would really want to see some sort of a resistance formed for price to continue to push down. Would really want some sort of a resistance formed. So yeah, so I guess this, even on the 4 hour, it didn't really do what we hoped it would do. We were hoping the 4 hour candle would break above the high to continue to push up, but I guess it's just coming back down. We're just basically consolidating at this point. 1 hour candles are also coming down into this support area, so we'll have to wait over here. You don't take any trades at London Open? No. If I have a trade running from pre-London, or if some sort of a intercession idea makes sense, then I'm going to execute on that. Every London Open doesn't mean you're going to execute a trade. You need some sort of confirmations. So yeah, we'll see. Okay, there we go. The 30-minute candle has closed like this, so we need some sort of a resistance forming for price to continue pushing down. So yeah, we'll see. This is getting very tougher over here to trade now. What are your rules to change bias in this scenario? Wait for new resistance. Yeah, exactly. So we're waiting for resistance to form. Oh. See the 1 hour right here, 30-minute right here. So yeah, basically we're waiting for candles to close in a way that we can identify could be good scenarios to probably take some profitable trades, right? So if you look at this 30-minute right here, of course, we've created a resistance. So but on the 1 hour time frame, let's see how the 1 hour, yeah, 1 hour kind of closed bullish. So if the 1 hour kind of closed bullish over here, I don't think it's enough to take a sell, because this range is, even though the range is 30 pips, 1 hour candle has closed against us. So this is, I don't know. No, we need the 1 hour candle to close in our favor as well. Because now essentially, this is just around 17 pips right here, the 30-minute support right here. So price is starting to range at this point now. Let's see if we have any news later on. We have we have CPI over here. All right. CPI later on. Probably that's why gold is ranging here, right? Because we got CPI. That makes sense. That makes perfect sense. Look at the way it's just consolidating here. Let's skip to CPI, and then let's just do CPI, and then we're going to move to Tuesday. Right? Right. This is 12. When is CPI? Oh no, CPI is next day. 13th. Yeah, CPI is next day. Okay. When CPI came 90% time gold range? Yes. Whenever you have a high volatile news, gold is going to range until that news comes out. Okay, so there we go. 1 hour candle is creating some sort of a resistance here, hopefully. If we create that resistance, looking at the 30-minute here as well. Oh, I think this was maybe a trade execution, but it's still into this rejection area. This whole area is a rejection area, very, very tough. Very, very extremely tough, this rejection area. So we're going to wait for the 1 hour candle to close. All right, there we go. The 1 hour candle has closed right here. 1 hour candle has created resistance. And this could be like a 22 pip right here, somewhat. Now, if I saw this trade, and in a live session, I'll take it only based on the fact that we've created resistance on the 1 hour, which is stronger than the 30-minute, and we have a potential wick fill right here. Now the stop is going to be around like 15 16 pips, and the trade is going to be a 21 pip trade. But if you look on the 4 hour, 4 hour is still whatever. So we're not even looking at the 4 hour at this point. Looking at the 30-minute candle close with no wick on the top. Now this is where you look at probabilities. The 30-minute candle closed with no wick on the top, like with a tiny wick on the top. So there's a 50-50 chance that the next candle can go up or down. But if you look on the 1 hour, the 1 hour is giving us confirmations that we could continue pushing down to fill this range, to fill this wick. Now, if the 1 hour is giving us confirmation that we can fill this wick right here, which is a higher confirmation than the 30-minute, then that 50-50 probability on the 30-minute tilts towards the sell. Don't you think? Right? It tilts towards the sells here a little bit because the higher time frame than the 30-minute is giving us that confirmation. So this is going to go in right here. This is like a 15 pip stop. TP, you're looking at price to fill this wick right over here. On the 30-minute, we have a lower high as well. Yes. We have a lower high and a lower low. Price is moving. We're moving now. We're coming down at this point. Let's take a look at the pips right here, 13, 14 pips, 10, 11 pips. I think this right here would be a very good idea to secure positions because the way it's kind of like, bouncing around. So maybe this right here, we're going to close everything. Oh, it actually went to the TP right there. Okay. All right. So we're basically just consolidating right here now. So, I mean, there's also no news happening over here, so who knows what's going to happen. So now we're going to move on to the next day. I've done exactly that before and lost some pips. Yeah. All right. This is 7. This is New York Open. Yeah, I mean, this is New York Open right here. Oh, wow, look at that. Oh, came down. Oh, went up and up. Okay, awesome. So volume came on later on. There was nothing we could do about it. Let's go back. Let's go to the next pre-London now. 7, 8, 9, 10, 11, 12. 1, 2, 3. Oh, yeah, we went up a little bit. Okay, that's fine. Let's take a look on the daily. Daily is still consolidating. We have candles printing side by side. Looking at the 4 hour. 4 hour is sort of creating a support right here. I didn't move time up intentionally. That was unintentionally. I pressed next bar and then we moved up. But anyway, that's fine. Right? Now, looking at the 1 hour time frame, we are consolidating. We are creating a resistance right here. Let's take a look on the support here as well, right? So we have a support forming at this point right here. So now we got to decide where price is most likely to go from this point, right? Obviously, we're consolidating right here. The only thing we can think of is that if we break below the support, there's a very good possibility we can continue to push down. If we break above this resistance, there's a very good possibility we can continue to push up. So let's move the zone over here first. This is probably going to move it down over here to the 1 hour support. And now we got to measure these ranges, right? If we break below, let's say 1790, We have like a 48, 47 pip range. If we break above, 1793, we have around a 26, 27 pip range. Now, looking at the 4 hour, this 4 hour candle has broken above the high of the previous 4 hour candle, which is giving us confirmations that price can continue to push up. But we have resistance on the 1 hour time frame. And that's the reason why we can't take a buy on the 4 hour yet, right? So we got to wait. We have to wait to see if we're going to get some confirmations. If this 4 hour candle breaks below this low, there's a possibility it can continue to push down. The whole 4 hour candle, because we have clean candles here to the left hand side as well. So we shall see what happens right here. See now, the 1 hour candle is breaking above this high right here. So this is going to be a great idea to take an impulse entry right here. We look on the 4 hour. 4 hour is also moving up. 1 hour candle is also breaking above these highs to the left hand side. So I think, this could be a very good idea to take a buy. So we're going to go with the 1% risk here. We're going to take a buy. Stops are going to be down in this range. We're looking at price to continue pushing up. Let's take a look on the 30-minute. 30-minute stops back in this range around, let's say, 17 pips right there. Don't want to keep it below the wick, because if price is breaking above this high, then price shouldn't have any reason to come back into this range. Oh, I guess let's just focus on the 4 hour over here. Yeah, should be good. Do you more take buys from the 4 hour versus the daily? Yes, I do take it more on off of the 4 hour. And if you look on the daily over here as well, daily also looks great, and it looks great for this new daily candle to fill the wick right here, which is 35 pips from where price is right now. 4 hour candle is moving up. 1 hour candle has broken above the high to continue to push up. So I think this is going to be a very, very good uh, like very good trade here for price to continue to push up, but the 30-minute candle is closing, and we just have to be okay. Let's take a look on the 30-minute. It seems like the 30-minute candle closed at this. Oh, it closed below this resistance. So what are we going to do? So now, are we going to hold this trade? Or are we going to close 50% because the 30-minute candle closed below this resistance? 50% close, because our confirmations are not adding up at this point, right? So we always got to manage risk over here. Mac is saying hold the trade. We're going to hold the trade for Mac over there. Temporarily imaginary um, 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 in our thoughts, we're going to hold the trade. Oh, yes, did not work there at all. Wow, what's going on over here? A lot of volume came in here all of a sudden. Where did all this volume came from? This candle is about to close, and we're going to see how it's going to close. Oh, wow, look at that. We're pushing strong down. What does that look like on the 4 hour time frame here? The 4 hour candle is also coming back down over here after creating that massive, massive liquidity wick. All right. Hello, cells? Question mark. Hello, cells? Question mark. Yeah, that's what I was thinking here, because we broke up, but then we came back down. So we just need this 1 hour candle to close. So we're going to wait to see how the 1 hour candle is going to close. We have 5 simulation minutes left over here. 5 simulation minutes left. Let's see over here. If we close above the support, then we're basically closing above the support. But we need to, oh yeah, look at that. Look at that retracement. Yeah, it's probably just going to range over here now. Come on, man. Candles closing. Oh, the last minute. We closed below the support on the 1 hour time frame. Looking at the 30-minute, 30-minute also closed below the support. As long as it doesn't close within the, yeah, exactly. So now we have what? We have time in this volume. We have the 4 hour sort of like, the bias at this point. So I would say if this candle does break below the low right here with volume, with 4 hour candle, breaking above this area and coming back in the range, with having this sort of like, minor wick out of this range, I think this could be seen as like a, fake out for price to continue to push down if we only break below this low right here. And then obviously we're going to anticipate the like the 4 hour to continue to push down to fill this range at this point. So yeah. Oh, slowly, slow. Yeah, see right there, we're breaking below this low. So whenever we do wait for a wick up or just execute, well, in this case right here, this is going to be execution because there's a lot of volume at this point. There's a lot of volume. So we're going to do a sell over here. Stop is going to go above this candle, which is, like 6 pips, but it's going to be a couple pips above this candle here as well, to count the spread in. And then we're looking at price to continue to fill this range. Right? Is this London Open? This is 1 hour after London Open. This is 1 hour after London Open. Oh man, another kind of like a loss here. But as long as we don't break above this high, we still should be good. Yeah, see, now we're moving down. Now, in this case, if price comes back to the entry point, we're going to be closing 50% because it went in profits, 6, 7 pips, whatever. If it comes back to entry point, I'm closing 50% because the whole idea, the entire time the trade is running, I'm only thinking about where can I reduce my risk. I'm not thinking about how much money I'm going to make. I'm just constantly thinking about where can I manage my risk, entry point or the open. I just said entry. So now the 4 hours moving, 4 hour has a clean candle to the left hand side. So, it should be good to run till maybe pre-New York at this point. Speed it up here a little bit. Should be good to go till pre-New York. You have clean candles. Perfect. No problem. The only thing we're going to do is if it comes back to entry, we're going to close the whole thing. So either you close at break even or you know, or you take the entire thing home. Oh, oh, wow, look at that. The way it's moving at this point. This is unbelievable. So at this point, this is very tough. Tough luck. No, not tough luck. We'll do like 50% right here. Because the candle is still open. 30-minute candle is about to close right here. Close with a massive rejection. Yeah, if this candle breaks above the previous high, we're just going to close the whole thing. This is very, 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 very tough. Now, the only thing is, the only confidence we have is on the 1 hour candle closing. That's it. If the 1 hour candle closes, oh, it closed a strong bearish candle. So I think should still be good on the 4 hour to continue to push down. The new 4 hour candle has also started now. So, yeah. So we're going to move away from the chart and let's just see over here. We're going to move away from the chart as if nothing is happening. Probably, maybe, yeah, should continue to push down over here on the 4 hour here as well. We're coming into pre-New York now. This is pre-New York, so this is when more volume should be coming in. Oh wow, nice, very nice. What are your rules for when to move stops to break even? My rules to move stops to break even are um, when I'm securing positions. Let's say if you're securing, you know, 50%, or if you're securing 90% because price has moved in profits, then you're moving stops to break even at that point. Always move stops to break even when you're securing some sort of a position. That's it. Other than that, I'm not even interested in moving stops to break even one bit. Okay, let's move on to the next day here now, and let's see what surprises we have right there. That retracement was really tough, but normally I wouldn't look at the chart, so we're going to do that here next time. Oh, we also have CPI coming in here as well. Awesome. So we have CPI coming at 1630. So we're going to trade CPI here as well. Is it 1630? Because this is 7 a.m. right here, 1400 hours. This is 7 a.m. 14, 15, 16. Is it 9:30 a.m.? Buy stops and sell stops? Yes. Yes. Buy stops and sell stops. Take a look at sessions. Let's take a look at sessions. Yes. It's coming up in the next 30 minutes. So let's move on to the next right here. Oh, wow, look at that. Okay, so let's study news over here, right? So they're expecting CPI, they're expecting a lower number. So when they're expecting a lower number, there's probably they're expecting a rise in gold because they're expecting bad numbers for the USD, so that means gold should go up. The core CPI, they're looking at the same thing. And price is moving down. So maybe it's moving down to grab liquidity to continue to push up. Maybe. Maybe. We don't know that yet because it hasn't happened. So we're going to move on to the last few seconds of CPI. And then we're going to execute this right here. So right here, we have a minute left. All right. You can see how price is moving. So this is where we're going to add, our buy stops and sell stops. So buy stop is going to go above this wick right here, which is about, 20 pips away. So we're going to do a buy stop, um, you know, right here. Oh, what's going on? TP somewhere up over there. Oh, entry is going to be right here. Buy stop, stop loss right here. Except sell stop is going to go down at the bottom right here. Yeah, you know what? I don't want to use buy stops and sell stops on this trade because we're up 1.6%. So if we lose, that's not going to be good. CPI is oh no, CPI is right here. Yeah. So yeah, there's no reason to risk our little gains on some news event. If I'm oh wow, look at that. Yeah, CPI was right here. This news is wrong because it's at 8:30 and this is 8:30. I don't know why the time there is wrong. Wow, yeah, we would have lost this trade because price went down, activated sell stop, and now would have been in. Hey, I think this is when I lost around 30,000, 30 or 35,000 on CPI. I remember, I think this was the same thing because sell stop got activated, then buy stop got activated. Or buy stop got activated first. Yeah, I remember this. I think this was the same thing. But anyway, let's move on to the next one. Oh wow. What was the outcome here? Yeah, bad. It was super bad. Core CPI was also bad. All right. All right, it was 6 p.m., 7, 8, 9, 10, 11, 12, 1. 1 a.m. Eastern, right? So let's remove all the analysis here first, and then we're going to do the same thing all over again. Remove this, looking at the 4-hour. And remove this. Let's take a look on the daily. Daily is looking good to probably continue to push up, right? We can see that clearly right here. that daily is looking good to probably continue to push up. Looking at the 4 hour, we're probably, well, obviously we're creating a resistance right here. Obviously, this 4 hour candle is creating a support, but it made a lower low and sort of like a lower high, and we don't know what price is going to do right here because we're basically consolidating as candles are printing side by side. Let's take a look on the 1 hour time frame. 1 hour is, oh, wow, it's just very tough over here. 1 hour is just straight consolidating. If we're consolidating right here, we're waiting for a massive, massive, massive break. And that massive break, it's coming. When is it coming? We don't know yet. So we just gotta wait. We can only anticipate it right now. So this is pre-London. We're consolidating. Let's just clone this over to the 30-minute time frame here as well. Let's take a look on the 30-minute. Oh, 30-minute has a lot more zones over here. Let's pause this, remove these zones, and then we can continue to look at things in more detail on the 30-minute time frame. Delete, zoom in. We have a support. We have a resistance. So this week we're up like 1.6%. It's basically not an easy week, to be honest. All right, so the 1 hour candle is coming down. It's going to be great if we can close below this area because the next candle then we can take sells to go down. So we'll see. And that sells are going to be probably correction of this move here we had yesterday. Don't trade news if you don't enough profit or trade with very, very low risk. Yeah, that's correct. Don't trade news if you're not up a whole lot for the week. Let's say if I was up like 5%, I'd risk 1%. But I'm up like 1.6%, so there's no need to risk 1% and to lose that, and probably more. We don't know. So yeah, so we're just gonna wait over here now. Or don't trade news at all. That's correct. All right. Okay, we have the 1 hour candle closing right here. This is still pre-London session. Pre-London, there's a lot of volume at this point. So now at this point, I may want to enter maybe if we break below this low or, yeah, because there's volume at this point. How big is this range? This is like a 34 pip range here. If we do break below this low, we're looking at around, 40 pips for price to move down. But yeah, we'll see. Looks like we're pushing up over here. Oh, we're breaking the high at this point. Seems like we're just going to range. Yeah, this is a tough week over here. A lot of patience, a lot of discipline required. Let's take a look on the 4 hour. 4 hours, whatever. But if we do break below this previous wick on the 4 hour, then I would say that there's a very good possibility we can continue to push down. Let's see if we have any news over here later on. We have pound, CPI, okay, and then we have CAD CPI, and then yeah, that's about it. Check daily and weekly. Yeah, there's no need. I mean, daily is whatever. Daily is saying that we should go up. That's what we're saying on the daily. Daily is saying we should go up to fill this daily wick, which is like 60 pips away. But we need confirmations on the smaller time frames, and we're not getting any buying confirmations on the small time frames, right? So we got to go with the flow over here. Oh, look at that. We're breaking below the low right here for price to potentially continue to push down. And let's take a look on the 30-minute here. 30 minutes also breaking below the low. 1 hour is also breaking below the low. The stop is going to be, yeah, I don't like it. Even though it can push down, there's a lot of volume at this point. London Open is going to start here soon. Let's do like a 0.5 risk. Stop is going to be somewhere up over here. We're looking at price to continue pushing down. Yeah. Thinking about impulse entry? Yeah, exactly. Because we broke below the previous low. That's why. That's the reason why I'm looking at an impulse entry right here to see if we can really continue to push down. The 30-minute candle is also about to close. There we go. The 30-minute candle has closed right here. So yeah, should continue to push down. If not, we're at least going to wait for the 1 hour candle to close. Yeah, this is pretty good now. We should continue to push down all the way to 1798 at least. It's like, not that big, 28 pips away. 30 pips away. So just going to wait for the 1 hour candle to close. Very tough over here. Very tough. 4 hour, 1 hour, about to close in about 10 minutes. Still got to wait for the 1 hour candle to close. 30-minute candle made a lower lower high at this point. We're up about 6 pips at this point right here. And candle's going to close in about 3-4 simulation minutes. Oh, very nice. We're up about 14 pips at this point. Now, see now, if you look on the 30-minute candles, right? The 30-minute candles are coming straight down, right? We've moved about 25, 26 pips, and we're coming into sort of like this rejection area to the left-hand side. There's volume at this time as well, but we don't know whether price will do a retest of this area or not. Because if you have this rejection to the left-hand side, there's a probability price can reject, right? So we got to keep that. So we got to keep this one thing in mind, that there's a probability price may reject as there is a rejection right over here. Also, keeping that in mind, that rejection could be a retest of this area for price to continue pushing down. Right over here on the 1 hour time frame, price made top wicks to continue to push down. So what we're going to do is we're going to leave the trade as it is, because we may get the same scenario here, because we've been consolidating for a long while. And if we've been consolidating for a long while, then and if price has broken, it should continue to push down, because the longer the consolidation, the bigger the breakout, right? So we're going to do the same risk management techniques if we come back to our entry level. If we come back to our entry point, we're going to close 50%, just like we did in the last trade right there. See this right here? We're coming back. Once we go into drawdown, we're going to close 50%. We're tapping into it at this point, which should still be good. We should still continue to push down, but we'll see. See right here? We're going in drawdown. I'm going in drawdown. So we're going to close 50% right here. Oh, it closed the whole thing. Yeah, my bad. But, we'll still see how well this plays out, or does it even continue to go down or not. Man, if it doesn't go down, if it goes back in the range, that would be just a fake out right here. This would be a very savage fake out by price action if it goes back in the range. It's not a fake out yet because it hasn't gone back in the range. Looking at the 30-minute here as well, we can see if we can create some sort of a resistance, then there's a possibility we can continue to push down right here, right? With volume at least. Yeah. This is a very good opportunity for the 30-minute candle to wick up, take a sell, and then move on down with volume, right? We need to wick up a little bit more. Wow, looks like this area to the left is actually very, very, there's some sort of an issue right here. This area to the left-hand side. Close, then add 50%? No, not yet. I wanted to, but the way this is moving, it's just garbage. Something's going to happen. There's going to be a big, big, big breakout. We just don't know when. We're moving into pre-New York now. We're moving into pre-New York, so who knows? Let's speed it up here a little bit. This is Wednesday. Man, so crazy. Insane the way we're acting up. Pre-New York. Yeah, still consolidating over here. Just don't know. Tough. Wow. Holy, still consolidating. Now we're moving back in the range. What's going on over here? Do you have any news happening? We have any news? We have CAD news. We have Empire State. There's nothing red folder about gold that should tell us that price should move, basically. So, yeah, I don't know. Maybe New York Open may bring some action. This is New York Open. So, yeah, maybe we could get something right here. Maybe like a buy right here for price to move up because it's breaking the high. So, price could move up towards, at least 1805, 1806. But the way this entire price action is forming, this is very, very tough at this point. Yeah. Oh, there you go. We tapped into the area. Yeah, now 8:30 is going to roll around. What's happening on the 30-minute here? Wow. Oh my God, look at that. It's rejecting that area here as well. I thought the 30-minute candle was going to close, you know, with like a little bit of a wick so we can take a buy, but this is just continuing to push down in this high volume time. This is so bizarre. Look at this 4-hour candle right here. So 4-hour candle is moving up here as well, and we're coming closer towards these lows. Yeah, this is some really, really tough situations happening right here. Let's put a blue line right here below the 4-hour low. Let's copy this over to the 1-hour time frame as well. We may want to do some expert um, maneuvers right here. Oh, oh, missed it. Oh, didn't miss it yet. Stop loss can't be zero. Stop. See, the expert maneuver is going to be when the 4-hour candle has broken its own high for the possibility of it to continue to push down. That's the expert maneuver that I'm looking at. Just like when you have someone doing, so it broke its own low, so it should continue to push down. That's basically what we're expecting to happen. Yeah, just like that. It broke its own low, 4 hours, so there's a potential for it to continue to go down. Similar volumes that compared to GG at London. Yeah, sometimes, Sam, they do have similar volumes at this point. But this week, I think, was just tough, man. Tough week. Gold has been moving really nice pre-London, London Open. Yes, it has. So let's move on towards Thursday. Wow, this was super tough. This whole week was super tough. So what's this? So we got to go towards 10, 8, right? 8. This is pre London session right here. Thursday pre-London session. Let's take a look on the daily. Wow. Okay, look at that. Daily has done a fake out right here, right? Because daily created resistance. We came up, we came back in the range, and now the daily candle has closed bearish. So if it has closed bearish and it's coming down, breaking below the low, I think there's a very good possibility daily candle can continue pushing down in this next range over here, right? I think there's a very good possibility. Let's take a look on the 4-hour. Oh, 4-hour has also created a resistance right here. And the new 4-hour candle is starting. And if this 4-hour candle breaks below the low at 1789, there's a possibility we can continue to push down, and that's going to complement our daily candle pushing down here as well. So we're probably looking at 1789 to break. Let's take a look on the 1-hour time frame. Looking at the 1-hour time frame, we do have a resistance forming right here, and we have the 1-hour candles. We basically broke below this area right here, right? We broke below this area, And there's again a possibility for price to maybe continue to push down. Let's remove the zone right here because it's bothering us. So we have clean range here all the way down towards, oh, it's a 100 pip range. This is a 100 pip range. Looking at the 30 minutes, let's clone all these towards the 30-minute time frame. And I think we may get a very, very good trade here today on the simulation. So the 30-minute is forming a bullish candle. So I would say if the next 30-minute candle breaks below this low, we are on our way all the way down towards, 1782. I think that's going to be a very, very decent target. Oh, wow, look at that. Retracement. That's okay. Just retesting. New 30-minute candle has formed. Look, see the 1 hour candle? It's right there. There's nothing strange about this. Slow down, tick speed, bro. Oh, my bad. I'm sorry. All right, it's much better. Okay, let's slow it down here a little bit more. See, now the 30-minute candle is breaking below this low. 4 hour is also turning bearish now. We did a retest on the 4 hour. Daily did a fake out. 1 hour is like this, 30 minutes like this. So I think this could be a very good indication to take some sort of a sell for price to go down. So we're going to go with, I think it's going to be, let's see how the stop is going to be. Stop loss is going to be around 15 pips. Yeah, no problem. We're going to do like a 1% right here, visual mode, sell. Phase is also doing a sell at this point. Beautiful. So we're going to accept this. And then we're going to go towards trades. We're going to modify. Oh, cancel. How do you take profit off? Oh, right here. Yeah, perfect. So what I'm going to do is I'm just going to go towards, so we're going to go towards my day over here. Normally, New York session day. I'm going to go take a nap, look at some YouTube videos over here. Cost of living in Thailand. Actually, I've been thinking about doing this, probably living in Thailand for about 4 months, 5 months. Really thinking about this. Was talking to my family yesterday. So yeah, I think this could be a very good video based on that. My 18% day Forex trading traveling. Oh, very nice. Yeah, Bali, Thailand, same thing, way cheaper. Thailand is way cheaper than Dubai actually. African Forex trader explains how evil the Forex industry is. Yeah, it's evil if you can't make money. All right, let's see over here. Oh, nice. 50 pips up at this point now, and London Open hasn't even started yet. Beautiful. Joe Aesthetics lives in Thailand. Oh, nice. So we're probably gonna leave it running till pre-New York. So now one thing I want to do, or one thing is very important that I want to talk about is that as you have these candles running at this point, you have to trail kind of like, you have to trail your stops. And the best way to trail your stops is to wait for the 1 hour candle to close. So we're gonna wait for this 1 hour candle to close. We're gonna trail the stop and then we're gonna leave the whole thing running. This is the last trade of this simulation, so we're gonna trail the stop losses over here. Let's just wait to see how the candle closed. Candle has closed. We're going to trail the stop above this 1 hour candle. We're still in deep profits at this point. So yeah, now we're just going to let it run and we're going to continue browsing YouTube and look at things. And what I was also looking at is I was looking at trying to get sleeves done. You can see insane full torso done. So go to history, looking to get a sleeve done. So I was looking at all these videos last night. That's why I slept late. Healing process, full sleeve. So yeah, may get a sleeve soon. Been thinking about it for past 2 years now. It's like artwork, So he's dating his assistant now, which is hilarious now at this point. Raja gone rogue, yeah. This is one of the best channels about business, money, marketing, and I mean anything related to business. This channel right here, Valuetainment. The amount of things I've learned about running business and promotions and stuff like that is insane. Insane the amount of things I've learned by watching this channel. So nice. Look at this. Now he gets like hundreds and thousands of views. But when he started long ago, 9 years ago, he wasn't getting any views at all. Now these are just views, people going back and watching these videos again. So if we scroll down over here, like 5,000, 2,000, some videos went viral over here, but majority of the time it was just like 8,000, 5,000, 3,000, so I mean, it is what it is. So, oh, nice. We're moving down over here. Oh, 120 pips. What's the time? It's not even pre-New York. So this is when I'm going to be looking at pre-New York and say, oh, hey guys, look, my trade ran here a whole lot than I expected it to run. Will a broker close your live account if there's $0 in it and it's not active? I activated an old account, had software for it. No, they shouldn't. They may archive the account after a few maybe weeks or months, because basically what happens is that when you have a MetaTrader license, let's say for example we have a MetaTrader license, we pay around, let's say, 25,000 a month to have a MetaTrader license, right? And on that 25,000 you can get like 25,000 live accounts. And if we see that some accounts are not active, they're automatically archived to make space for new ones. Because next step up is to have 200,000 live accounts, and that costs around 54,000 a month. So I think to save costs, that's what they do. They basically archive non-active accounts. Would you take profit at next NY zone or later on? No, it just took profits, whatever. So if you look at the daily did continue to push around. Oh wow, it's continuing to push around over here. Looking at the 4 hour also pushed down. So this was the only high volume day we had in this week for gold, apart from CPI that happened. Yeah. So this simulation, I guess, was good in a way that to manage emotions, manage risk, like cutting losses. It was good. Like like a lot of guys, when you guys do simulations, you take trade after trade after trade after trade. But the right way to do simulations is just like this. Treat simulation as if you're live trading. There's no reason to take a trade after trade after trade on a simulation. And sometimes we lose track of the time right here. You look at the time right here, we lose track of the time right here, and you're trading, looking at candle and trading, candle trading. So keep an eye on this time right here. If this time goes beyond your live trading time, there's no reason for you to do that same day and then you're going to move on to the next day, right? So we managed a whole lot of risk in this simulation. There was a lot of consolidation, and I think there was just one trade that we let run. We also had this one sell we had run, which was a little bit wonky over here because we had support around 45 pips away. In this case, we had support about like, almost like 100 pips away at this point. But I think this simulation was helpful in a way to manage risk. If we take a look at let's pause this over here and trades, right? Oh yeah, trades. Let's take a look at right here. So these are all the trades we took. Closed trades were right here, so you can see like -4 pips, 12 pips right here, drawdown, draw. Oh, hold on, what's going on over here? Why do we have negative drawdown over here? This is all negative. Oh, pips positive. Oh, okay, maximum drawdown. Oh, maximum drawdown was this one right here. So this is like negative. So the negative are like, what, $2, $5, $5. So this was on the same day. So this totally we lost like what, 5 plus 5, 10, 10 plus 2, 12, 12, $13. $13 lost on this one trade. This was the winning trade, $127. This was another trade where we managed risk. This total loss was what, like 15 plus 7, 22, 22, 23, 24. $24 lost. This was a winning trade, $59 win. This was a loss right here, and this is another win right here. So kept losses small. That was the whole idea, by keeping losses small. So even if you look at the history, this is all the history right here. The idea was to keep losses small, and I guess we made about $200, $277 in this whole week. So anyway, take care, everyone. The recording is going to be in the database in the next few hours. I'm also going to post it on Slack when the recording is up there. Have a great Sunday. I'm sure someone's Sunday is just starting right now, but yeah, have a great Sunday. Take care. We'll see you on Monday.